Good afternoon, Portland metro area. Jennifer Timm here, real estate wealth advisor with Keller Williams Portland Premier and also with Keller Williams OC Coastal Realty in Southern California. I'm a real estate agent, and basically, I'm a real estate agent with some superpowers, and I help you unlock the wealth that you hold in real estate. We are back. It's been about a month since I've last been here. Spent a month focused on my family because we had a very sad loss in our family. But glad to be back. Lots going on that impacts your real estate and your real estate wealth. And so we are here with our midweek market brief for the Portland metro area in Oregon. And it is July 22nd, 2026, and a little toasty out there. This is where smart money watches the market. So let's jump in and have a look at what's happening on the national scene. So the housing market is rebalancing, it's not retreating. National home prices are up 1.1% year over year, showing continued appreciation despite affordability challenges. Only 23% of the nation's largest housing markets are experiencing annual price declines, which is down from 37% a year ago, signaling that the broad-based market softening is definitely easing. Inventory continues to improve, giving buyers more choices while reducing the intensity of bidding wars in many markets, which I know buyers really appreciate. Mortgage rates remain in the mid 6% range as cooling inflation is offset by geopolitical uncertainty and higher oil prices. We'll look at that in more detail. Seller concessions are becoming more common, with nearly 46% of transactions including concessions, creating opportunities for buyers to negotiate closing costs and interest rate buy downs, which are very popular. Pending home sales fell 5.4% in June, reflecting affordability challenges created by elevated mortgage rates rather than a lack of buyer interest. Housing starts jumped 19%, but the increase was driven primarily by multi-family construction. Single-family construction remains relatively flat, meaning inventory constraints for detached homes are likely to persist. Senior housing wealth reached a record $14.9 trillion, highlighting the tremendous amount of equity available to many homeowners for retirement, estate planning, downsizing, and wealth transfer. And of course, that is what we specialize in. So, what did happen with mortgage rates today? Our update from Mortgage News Daily headline: mortgage rates inch up to the 11-month high. So we have bad news and slightly less bad news. This is their narrative today. Starting with the latter, today's mortgage rates are only marginally higher than they were yesterday, with an average top-tier 30-year fixed rate up 0.02%. The bad news is that this takes our rate index to 6.77%, the highest level since July 28th of last year. Mortgage rates are driven by the bond market, and bonds remain under pressure from a renewed surge in fuel prices. Specifically, higher fuel prices and additional uncertainty about the Iran war increase inflation expectations, and it's inflation that is the actual thorn in the bond market side. Last week's inflation reports definitely offered some solace, but the bond market has progressively come to terms with the fact that last week's data was for the month of June, the best month for lower fuel prices since the start of the Iran war. July has been the polar opposite, with gas futures quickly jumping back up to their highest levels of the year as of this morning. Our national smart money insight: today's market is shifting from speed to strategy. While higher mortgage rates have slowed transaction volume, home values remain remarkably resilient. Inventory is gradually normalizing, and negotiating power is improving for buyers. At the same time, record homeowner equity and growing seller flexibility are creating opportunities that didn't exist just a few years ago. Smart money isn't waiting for perfect conditions. It is leveraging today's market by negotiating concessions, evaluating equity performance, and making long-term real estate decisions that build generational wealth instead of trying to time interest rates. And That brings me to a question for you. When is the last time that a real estate agent or real estate professional offered to do an annual property review for you? That is something that we do. We actually look at your equity position in your primary residence, in your investment properties. In your investment properties, we'll do an asset performance test to see how they're truly performing in today's market. If that is something that is of interest to you, definitely reach out. We would be so honored to perform these analyses for you. Our local market spotlight, starting with Portland, our market action index is 42, and there's the rest of the numbers for you to read. Portland remains in a slight seller territory, but the market is clearly becoming more balanced. Inventory is rising, the MAI is declining, and nearly half of active listings have reduced their price. That combination suggests that buyers have more choices and greater negotiating leverage, even though supply and demand have not yet shifted fully into a buyer's market. Smart money move, buyers should focus on listings with extended market time or recent price reductions, where there may be opportunities to negotiate repairs, closing cost credits, or interest rate buy downs. Sellers should price carefully from the start because overpricing in a plateauing market can quickly lead to longer market times and reduced leverage. Lake Oswego Market Action Index of 34. Lake Oswego remains a desirable luxury market with a slight seller's advantage, but conditions are becoming increasingly selective. While the Market Action Index has ticked up slightly, more than half of all active listings have reduced their price and homes are taking longer to sell than in neighboring Portland metro communities. This tells us that demand is still present, but today's buyers are highly value conscious and willing to wait for the right property at the right price. So, a smart money move, luxury buyers may find some of the best negotiating opportunities in years, particularly on well maintained homes that have been on the market for several months. For sellers, strategic pricing and exceptional presentation are more important than ever, as premium buyers are rewarding that aspiration. Beaverton, our market action index of 44. So it continues to show stronger demand and faster market movement than Portland, with a higher market action index and shorter median days on market. However, increasing inventory and a slight decline in the index indicate the buyers are beginning to gain more breathing room. The middle price segments are moving relatively quickly, while the upper tier is taking longer to sell. Smart money move buyers may find the best combination of value and negotiating opportunity in Beaverton's higher price ranges, where days on market are longer. Sellers in the mid-range can still benefit from solid demand, but accurate pricing and strong presentation remain essential. Watch your feed for carousels with data from some of the other areas that we cover. And from a global perspective, last month when I was here, we were looking at some lessons from the FIFA World Cup, and of course, congratulations to Spain for ending up at the top. And for us soccer lovers, we have a little bit of withdrawals symptoms going on. But at the same time, we are now into the third week of the Tour de France. The Tour de France is the best cycle race on the planet. And I mean, it's 3 weeks long. They have 2 rest days, but they are currently in their final week of the Tour de France. And there definitely are a lot of lessons and similarities between what happens in the Tour de France and what happens with wealth building. So I thought I'd share some of those. So the Tour de France is not won with one burst of speed. It is won through endurance, strategy, teamwork, adaptability, and consistent performance over time. The same principles apply to building generational wealth through real estate. It's a marathon, not a sprint. The tour unfolds across multiple stages, and no rider wins the race on the first day. It's really who finishes the race in the least amount of time by the time they arrive back in Paris on the very last day. Real estate wealth is built the same way. Small gains compound over time. Equity grows through patience. Long term planning matters more than short term headlines, and one difficult market cycle definitely does not define the outcome. The power of the peloton. Now, the peloton is when they all ride together in a group, and oh my gosh, it's amazing to watch all these individuals sort of move together up and down mountains and you name it. And cyclists do that because they conserve energy and improve performance by riding together in the peloton. Successful families benefit from a strong advisory team. They have a real estate wealth advisor like myself, an estate planning attorney, CPA, financial advisor, lender, and trust professional. No one builds a lasting legacy alone. And I mean, besides the peloton for the cyclists in the Tour de France, it is their support teams, the logistics that goes into supporting those athletes every single day is absolutely phenomenal. I am blown away every time when they show kind of what's going on behind the scenes to support all these phenomenal athletes. Every stage requires a different strategy. The tour includes mountain climbs, flat stages, time trials, and unpredictable weather. For example, yesterday was an individual time trial. Today there was some mountains to start and there's a sprint finish. Don't, spoiler alert, don't tell me who won today's stage, won the sprint, because we haven't watched that yet. The weather that they've had to endure, they have had days in the 90s and into the 100 degrees. And these are athletes who are out there on the road for hours at a time doing 100 to 200 kilometers a day in the most extreme conditions. Now, real estate plans must also adapt as life and markets change. So, different stages of your real estate plan may call for buying, selling, downsizing, refinancing, completing a 1031 exchange, eliminating rental burdens, repositioning equity, and preparing your property for the next generation. And that's why I say that, and I have adopted this from a very good real estate wealth advisor, Jennifer Thompson, is she tells everybody she's a real estate agent with superpowers. And this is what we do. We help with all of these. We don't just help you buy and sell real estate. We truly look at every aspect together with your financial and legal team and help you achieve your wealth goals. The yellow jersey is earned cumulatively. So the yellow jersey in the Tour de France reflects the best overall performance. So it's something that it is done every single day. They calculate what is the total time spent on the route over the various stages. Currently, the yellow jersey, and I believe that is still true today, again, haven't seen the results from today's stage, that is being held by Tadej Pogacar. He arguably is the best cyclist who has ever participated in the Tour de France. He is phenomenal. He is fast in the time trials. He goes up and down mountains like he's a mountain goat. It is absolutely phenomenal to see him. But it's not just one stage. It is every stage. It is how he is maintaining and building towards that final stage on the Champs-Élysées in Paris to see if he's going to end up being the final winner of the Tour de France. And wealth building works the same way. Long-term success comes from purchasing quality assets, paying down debt, protecting equity, improving cash flow, reducing unnecessary taxes, and making thoughtful decisions year over year. I mean, Tadej has not got to the level that he has by just going out and arriving at the Tour de France. It is all the months and years of preparation for him and his support team to help him achieve his goals. Your real estate plan is your race strategy. The tour teams, the Tour de France teams, study the route, anticipate obstacles, assign roles, and prepare for every stage. I mean, nothing is to chance. Now, unexpected things can happen, but for sure, they know exactly what tomorrow's route is. They know what nutrition the athletes need to consume. They know exactly when they should consume what they need to consume. They know how much sleep they need to get. I mean, to the point that they actually transport mattresses for these athletes from hotel to hotel, because of course they're staying in different locations every evening, and it's to make sure that the athletes can achieve the best recovery possible by sleeping on a familiar mattress with their favorite pillow. Families need a clear plan for building wealth, protecting their assets, reducing family conflict, and predetermining inheritance, transferring real estate efficiently, and creating a legacy that lasts beyond one generation. This is where we come in. So, your smart money insight from the lessons from the Tour de France, the goal is not to win one stage. The goal is to complete the entire journey with a strategy that protects your position and moves your family forward. The most successful real estate decisions are really based on perfect timing. They are based on preparation, discipline, expert guidance, and the ability to adapt when conditions change. Build your team, know your route or your route, and stay focused on the long game. As we say, your legacy begins with a real estate plan. For our wealth building insight, we've prepared a summary of the 21st Century Road to Housing Act and what it means for building wealth. So, this is the one that was just enacted into law. First point, more housing supply equals more opportunity. The new law is designed to increase housing inventory by encouraging new construction, manufactured housing, office to residential conversions, and rehabilitation of older homes. More supply can create additional buying opportunities over time, and we'll get back to that point. More affordable entry points for future buyers. By supporting the development of more entry-level housing, the legislation aims to make home ownership more attainable for first-time buyers, helping more families begin building equity through real estate. Revitalizing existing neighborhoods. The law includes grants and forgivable loans to renovate aging homes, encouraging neighborhood revitalization and preserving housing stock rather than relying solely on new construction. Encouraging smarter land use. The legislation incentivizes states and local governments to modernize zoning and land use policies, potentially creating more townhomes, duplexes, and missing middle housing in communities where supply has been limited. Limiting large institutional investors. The first of its kind provision limits investors owning more than 350 single family homes from purchasing additional properties with the goal of preserving more opportunities for owner occupants. Now, we've looked at these statistics before, and that is a very small percentage. The majority of investors are mom and pop who own 1 to 5, maybe, investment properties. Long-term impact, not an overnight fix. So housing experts emphasize that implementation will take years. While the law is an important step towards improving affordability, it definitely doesn't immediately lower mortgage rates or eliminate today's housing shortage. As we know, there are other political and geopolitical factors at work here. So, your smart money insight. The greatest wealth building tool isn't waiting for the perfect market. It's owning, appreciating assets over time, and they do exist. This legislation recognizes that increasing housing supply is essential for long-term affordability. And while it won't create immediate relief, it lays the groundwork for more home ownership opportunities, stronger communities, and greater access to the wealth building benefits of real estate. So, families who already own real estate are in a unique position to, excuse me, to use today's equity to help the next generation through thoughtful planning, strategic investments, co-ownership opportunities, or legacy-focused real estate strategies. Real estate has long been one of the most powerful ways to build, protect, and transfer generational wealth. Your legacy begins with a real estate plan, and the families that create generational wealth, aren't just buying real estate, they're creating a roadmap for future generations to own it. So if anything in today's brief sparked questions, inspired the next step, please, I'd love to connect, whether it's to do an annual property review of your personal home or your investment properties. No obligations whatsoever. This is what we do to help you unlock the potential equity in your real estate to help you achieve your wealth building goals. So definitely reach out. And our final disclaimer, the material is provided for general information purposes only, should not be construed as investment, tax, or legal advice. We do obtain the information from credible sources, but it's provided without any warranty guarantee of its accuracy, completeness, or results from using. You should always consult your own legal, financial, and tax advisor and verify all information to your satisfaction prior to taking any action. And that's why our goal is to earn a seat at the table together with your financial and your legal team to help you achieve your wealth building goals. With that, thank you so much for joining us. I will be back next week, and hopefully this crazy heat wave will be over soon. See you next week.